Have you, as investor, wondered what is holding most investors from getting potential returns? The reason why most investors are not able to generate potential return was that because they are not able to pick the right investment. So, it is important for you to identify the ideal investment among various investment options available in the market. We have our investment expert Mr. Gurraj with us who will help us find answers for how to pick your investments and what investments to consider. Gurraj, please help us get a better clarity on this.
So basically, what happens is you have so many avenues to invest, right? I can go directly to the share market through a broker, or I can go through the IPOs and all those things, right? Then, of course, I have mutual funds to invest. Then the small savings, bank FDs, corporate deposits. Some of you who have more money can also look at the PMS because the minimum ticket size is PM and 50 lakhs. They can then you can invest in gold either in physical form or your ETF form or even paper form. All that is possible. Then, of course, the real estate, either buying property or even buying a parcel of land, all that is possible, right? So many avenues to invest. So when you are looking at so many avenues to invest, as I always say, understand the risk in each of this, right? That is very, very important. So I will always pose this question. I need to have safety, liquidity, and return, right? So whenever I'm investing in each of these assets, I will ask this question, boss, what is that I will get? For example, when I talk of shares, safety is definitely not there. In terms of making a loss, there is a possibility. So I will not say my capital is safe, right? But liquidity is very much there because whenever I want money, I can sell the share provided it is being traded. So I have to be very careful. I buy only traded securities. A return is decent if I hold it for longer term. Same is the case with mutual funds also. Yeah, safety is definitely there, but I will not rule out that your returns cannot be negative. That is very much part of any investment. Of course, liquidity is there in mutual funds, and the return is a decent return. But when it comes to real estate, you will feel that liquidity is not. Of course, the investments can be safe provided you have verified all the papers and then bought the property. Otherwise, even there, sometimes it becomes unsafe, right? Because somebody would have duplicated something and sold you. So those risks. So what I'm saying is, always understand when you're investing, because what is the risk in this? Should I take it or not? Always ask that question, right? And of course, some investments will give you tax benefits, like some of the mutual fund schemes or the PPF schemes. All that will give you some tax benefits, right? So be clear with that SLR. SLR is nothing but your safety, liquidity, returns, and of course, what is the tax benefit you are getting. For getting into mutual funds, I would again make a comment and then start with. And it is not only applicable to mutual funds, it is applicable to all investments, right? Please be clear, return is not in your hands. Why I'm saying this is, I may show you a lot of data points, fact sheets, right? Which says that, boss, if you invested for 10 years, you would have got 14%, 16%, 18%, or 20% in some of the cases, right? They'll show 3-year return is this much, 5-year return is this much, 10-year return is this much. But they are all past returns. Please be clear. If you ask me in the next 10 years how much I will get, no answer. No answer. Right? So that is where I said when you are defining goals, be realistic, right? That's where we'll say if you come for 10 years, I will assume probably you will get 10%. Please, again, I'm repeating this word, probably you will get 10%, right? Here also, I'm not saying you'll get 10%, probably you get 10%, right? This is the reality we have to accept. You can't blame the advisor saying that, boss, you told me this fund will give 15%. This fund gave only 12%. You can't say that because honestly, nobody knows how much this fund will give after 10 years or 12 years. So the mistake what we normally do is we go and invest in that fund because it has performed well. Right? Unfortunately, if that is our expectation, then we are setting up a wrong expectation. Because this is one part which affects us in all our investment. Because we presume I will get this much, right? Reality is something different. You will never get that return. That is the reality, right? Now, the second reality which it has to sink in is very important. Please be, I mean, I'll be very practical. Let us say we have done, as I told you in the earlier slide, draw a financial plan, right? When you're drawing a financial plan, the first thing you'll do is you'll assume some return, right? Because that's how you calculate how much SIP you have to make, right? So I'll assume, let's say 10% or 11%. Right? So now let us say you assume 11% and after 10 years you got 10% return, right? Just to give more precise example, let's say you wanted a target amount of 25 lakhs and you got, let's say, 23 lakhs after 10 years. Yeah. So this is the reality. After 10 years, you realized it because I wanted 25 lakhs, I got 23 lakhs, right? What you will do now? Will you blame the advisor? Will you blame the mutual fund? Will you blame the scheme or the fund manager? Because absolutely you can't do any of these things. This is what in reality will happen. You need to accept this. So now what is that you can do? Either if you have, for example, you plan that 25 lakhs you required for your child's education, right? From somewhere else you have to get this 3 lakhs. That's the only solution to it. You can't say I will postpone my children's education by another 2 years. You can't do it, right? So this is the reality which you have to accept while investing. Return is not in my hands. It is not in advisor's hands. It is not in anybody's hand. Is the reality which you have to accept it. So that is where you have to focus on what are the things you need to do.
Thanks for your detailed answer. If you have any doubt regarding this or any other financial or investment decision, don't hesitate to book an appointment with our financial expert. The link to the appointment is given in the description below. And also, would you like to know more about finance and investment? Then we would recommend you to attend our live webinar. The link to the webinar is also given in the description below. The webinar is absolutely free. If you like this video, hit like, and if you are new to our channel, please do subscribe.